What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, is the morning after NVIDIA earnings. But I feel like that's a backstory. I mean, that's not even like front page news. Really, front page news is just this market. So, I don't know how many of you are ZU people. I think a lot of you are, not everybody, but that's okay. And yesterday, in my write-ups for both Surprise Trader and Momentum Trader, I went off on trying to explain what is going on here. And I guess the simplest thing that I wanted to get across was, yes, interest rates are, in fact, on the rise. We know this. It's going to happen. Now, the market's not going to go down into the gutter just because interest rates are going up. Like, that's not the mechanism you need to have in your head. You can't just think, oh, interest rates go up, market goes down. It's not that simple. So there's something to be said about the pace of interest rate hikes and the general kind of market environment that you're in at the time. I know some of these are going to sound like vagaries, but you just gotta let me work through them, A, and B, just think about it in the grand scheme of things, because all of this is grand scheme stuff. This is all bigger stuff, right? So in the short run, these algos, these sell programs, they're going to be based on two things. They're going to be based on the rate of change in interest rates, and they're going to be based on where the VIX is, okay? There's a lot of them that say, oh, volatility, the VIX is up over this level, we're going to be looking to sell that day, right? And why are they like that? Because what they do is they look at the history of the market over the last umpteen years and what the market has done on days where the VIX is above a certain level, and then that gives them an edge. So if 65% of the time that the VIX is above 20, I'm just throwing random numbers out here, but if 65% of the time when the VIX is above 20, the market sells off, guess what's going to happen? When the VIX is above 20, market's going to sell off. And then they try to get a little bit smarter, where they go, if the VIX is above this and you get this rate of change in interest rates that is above this, then we're going to go ahead and dump it. And that's the kind of stuff that happens, okay? So when the selling jumps in here, you can't just say, well, rates, right? Yes, of course rates have something to do with it. But look, historically, we're still at very low interest rates. Let's try and get some perspective here. We're at 2.85. I guess the easiest way to do it, let's get off of this 5 minute. Let's just go on these dailies, right? All right. Hate to point out the obvious, but in 2014, when interest rates were up at 3%, to start off 2014, were we like bleeding? Was the market hemorrhaging? Did it look like the end of the world? No. Okay? No, it didn't. So we shouldn't be feeling the same way when the market's at 2.85, that, oh my God, this is the end of the world. What's happening? Okay? So there's that part. But there is a deleveraging effect that takes place when these rates start to creep on up. The easy trade was, okay, let's go ahead and borrow money at very low interest rates and put that to work in the market and make money. Of course. And then when interest rates tick on up, it makes it a little bit more expensive to do that, doesn't it? Yes, it does. So for sure, that's with this quote-unquote punch bowl being pulled away, that's going to be a thing. But I think what was more of an impact on this market in the last few days, people are underestimating the impact of the budget deal. Okay, that was a big deal that the market needed to get over. We needed that budget deal. Think about what happened. Okay, we cut taxes. So let's say, I don't know how many of you all are full-time traders or retired or students or 9-to-5ers or whatever, but let's say your 9-to-5 job all of a sudden said, you know what, you were making $1,000 a week? Nah. How about you're just gonna make $750 a week, okay? In income per week. I don't even know what I was trying to write there. Per week. Well, I guess I'll just do slash week. You know what I'm talking about. Okay. So let's say your income drops from $1,000 a week to $750 a week, okay? At the same time, your credit card balance went from $0, now you maxed it out. Okay? So you've just done that, and then you go and you apply for a new loan on a car. Now, back when you were making $1,000 a week and you had $0 on your credit cards, you probably get that new car loan for 3%. But now that you've taken a pay cut and you've maxed out your credit cards, what do you think that interest rate's going to be on that new loan? You're going to be paying 10% on that new loan, okay? So that applies to your personal life, okay? So what did the U.S. government do? Tax cut, which we could sit here and argue that over the long run, you know, I'm not even going to get an economic argument, but over the long run, let's say eventually receipts are supposed to go up. But I don't think that anybody can argue that the immediate effect is not a drop in those tax receipts, right? This is, in fact, the immediate effect. Drop. A dip. And then, now, you couldn't pass a budget. Okay? And then, on top of that, with these receipts going down, you have to increase the supply of your bonds. Okay? So you got less money coming in, and you're asking for more money, and you haven't even figured out your budget. And we're wondering why we're seeing interest rates tick up over here. Makes perfect sense to me. So I think the market was more concerned with the government shutdown than they were anything else. Okay? And here we are. Okay? So good news is that's been worked out. Okay? So they finally passed our budget. We're fine. And if you notice on the 10-year, a little bit of congestion here now. Okay? It's not rocketing upwards. Starting to get into a little bit of congestion. Kind of looks like it's going to work its way through that congestion and go higher, though, doesn't it? But that's okay, as long as it's neat and orderly and we have a budget in place. So what's happening here is it's not risk models adjusting, simply the market moving. So you can almost think of that right? This is the worst chart I could ever draw, but that's okay. So you guys remember this. So here's the price. In this case, we're just going to say rate. Okay? And then this will be like the volume, right? The nominal demand. Or not demand, but nominal is a number, right? Nominal blah, 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 blah. Okay. So when rates go higher, you're going to have more people wanting to step in and do this shit. More people willing to step in and buy, right? So it ends up becoming more attractive. I should actually flip this on its head, but let's not get to it. Anyway, the point is, I'm not trying to bore you with the gory details here. But here's the point, is that when people are adjusting their risk models, that's not changing just where the rate is or going along one curve or the other. It's a shift in these curves, which reassesses everything. When all of a sudden you have a huge shock to supply, it's dramatic. So whenever you have like these global risk models that are adjusting, it's not like a little bit of money here and there. It's huge swaths of money that are changing hands. So that's why when the market starts to sell off, and it feels so dramatic, it's not like just a little bit of, it's not sector rotation. This is not sector rotation. This is full-fledged, where's my, there it is. This is risk models adjusting. And a ton of money coming off the table. Because there's a spike in the VIX. And there's 10-year on the move. Now, as we go through the rest of today, I was telling to Jesh, and I wasn't trying to be mean, buddy. I maybe it came. It's hard when you're texting or when you're just typing. Sometimes you can't fully understand my meaning behind these things. So I hope I didn't come across a little too salty, my friend. I'll get your fib here. But my point was, let's not be so myopic that, 3 minutes in, 5 minutes into the trading day, we're saying, oh, the rally's over. Just like here, I wouldn't say, oh, the selling's done. We're chopping in a little bit of range. Let's find out what our opening range is, and let's see what's happening. Give the market some time to be the market here. Now, this should frighten everybody. This end of the day, just puke. And the fact that we're not bouncing back here dramatically makes you a little nervous. But that's what these intraday things do sometimes. It makes it a little, these opening ranges can get a little. Let me zoom out and give you this fib. So here we go. This fib has basically, I don't want to say it's been blown up, but it's almost nearly been blown up. This is from the all-time highs. Jan 26th high to Tuesday's low. So that's actually a nice, neat little fib structure. Goes down, goes up almost to the 50%, and then now it's broken down. If you're trading solely based on this fib, you're talking 24.54 before this thing lets up. Okay? And that is, so there's various steps here before you get down there. And then the obvious 2,500. But I think it's more likely if we see a significant break, if there's a break of the 200-day, we see 24.54. So the 200-day, let's go back to the daily chart. Pull this bad boy up. Come on. Okay. There we go. 25.38 now. It was, or 25.39. It was 25.38 yesterday. 25.39 here. Yeah, and to Josh, I'm telling you that too. This is what convinced me that this market wanted to hit that 200-day. Is this rejection at the 50-day? How many times have you seen that in a stock? Now let me add. I'm going to add a commodity channel index here. And I think I'm going to end up ponying up for this trading view, by the way, because this is a nice, inexpensive way to show everybody everything here. Okay. So, let me get off of this daily, actually. Because it's just too... doesn't look right. All right, let's see. All right, here we go on an hourly. This is better. So we know the 200-day is, what did I say, 25.39? It's all the way down here. Oh, I guess I do need the daily. I need the daily. Okay. Let's zoom out and give you some perspective here. What's going on? Okay. Oh, man. All right. Well, how do I... Trying to have this done in a smarter fashion here. Now, you're going to have to go back a while to find the market coming underneath that 200-day. So remember, we were really flat in 2015 for a while. So there was a lot of interaction with that 50-day and 200-day. Here's April of 2016. Market spikes down, gets under the 200-day, finds some support, rallies back up. Then breaks down under the 50, rallies up to the bottom of the 50, and then's forced back down to the 200 before it finds the momentum to break through. This appears to be much more what's happening right now. Under that 50-day and then getting slammed back into the 200-day. I always feel bad listening to this song. Like, an ex-girlfriend of mine used to like the song. Used to like, obviously she had brown eyes, and I always feel bad, man. I feel bad. I do. It just didn't work. It just didn't work. She had to go. But I always feel bad, you know? I feel bad. Anyway, so another situation. You're down below it, hit up to the 50-day, and then boom, the 200. Now, are you guys noticing something? That 200-day is not something that is like a firm level of support. That oftentimes they rope-a-dope you at that 200-day. We all remember my rope-a-dope, right? You push down under a level. You push down under a level. You hunt all these stops underneath, swallow them all up, and then you curve back up. Happened again here. Force it under the 200-day. Happens again here. Force you under the 200. Force you under the 200. Chop around under the 200. This could be more likely what we see, something like this. And then I know this is going to hurt. I'm having flashbacks. Anytime I even look at a chart of 2009, I have flashbacks. They're traumatic. When the market really got ugly, this is something that you expect to see at market tops, though. So I want to point this out, okay? Specifically with this 200-day. Now, there's a famous trader called Joe DiNapoli, and he does like the displaced moving averages. I used to do a lot of that early on, and then I said, what am I doing? I'm making this too complicated for people because a lot of people can't use displaced moving averages in their charting platforms. But look at this. You're up, you're down, below a certain average, above a certain average, and then back below that average again. So it's sort of down, up, down reversal. That's what you need, because what happens is you get, how about I draw that more crooked so nobody knows what I'm talking about. I could just make this 200-day thicker, and then we wouldn't have this problem. I wouldn't have to sit here showing you guys how terrible of a kindergarten student I was and how much I stink at tracing. There we go. So you get this pattern where you break the 50-day, you break the 200-day, then you wind up above it, just like they rope-a-dope under the 200-day. They rope-a-dope over the new highs, and then when they flush that again, watch out. Flush it again under the 200-day, and then it stalls. You happen to get a death cross here, but that's more of a function of this up, down, up than it is that cross, right? It's math. Fails at the 50, and then it's lights out. And then if you notice again, after some time under the 200-day, it comes back to that 50 again. So this is the market's last gasp going, but we could, but maybe, nope. And then when you stall out at the 200-day, that's when things really get ugly. Then that's lights out. And I need Tums right now just looking at this. I'm having flashbacks. Boom. And if you notice, The reversal is flipped. Yeah, that's the death cross, but ignore that. Look at the reversal being flipped. So here we go. All the way low, okay? Up over the 200-day. Then makes a new low. Before getting back, in this case, over the 50, supported the 50, and then you're in the clear. So don't just look for a stock or an index or whatever going over this average. When it flips, boom, 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 like that, that's the reversal, okay? And you will see it, and it will take some time to play itself out. So now, let's go right back here. Pando, are you sure it was the crisis? Did you send in a headshot? I'm not saying it had anything to do with it, but I was just wondering if they saw your picture as part of your interview process for the internship. You know I love you, Pando. I'm just messing with you. I am a mean-spirited person, and I'm sorry, dude. I had to get you. And plus, since it's my show, you're just low-hanging fruit, man. There's nobody that can talk back to me, and I could just delete you if I could just... Pando! Really? Really? You can't drop 4-letter words in my chat, bro. Unbelievable. Oh my goodness. Dude. Unreal, man. Take it easy, sunshine. It's a Friday. Take it easy. All right. Wowzers. Okay. So, what are we seeing here in the S&P 500? So, we've got this high starting to creep down, okay? So, if we get down under this 200-day, get back over it to new highs, and then get back down, then it's the end. Now, maybe I'm stretching this out too much. Could this just be the time where they finally go, nope, it's over? I don't know. I think you have to chop around a little bit before you can call a top. At the very least, we should have this interaction with the 50-day. At the very least, should have this interaction with the 50-day, okay? A low, an up high, and then a lower, okay? At the very least. So we have yet to do that official reversal. And I don't even think that you could argue that, well, this is part of, this process. It's not. This process, the topping process has not happened yet. This is a little bit troubling that we came up to the 50-day and now we're selling off again. But I would bet that this 200-day provides some support. I'd actually like this to come down at the 200-day. But it's got to chop around. It's not the end of the world. It can't be. It just doesn't happen that way, right? It's not one day where just boom, it's over. You need to have, in order for these market tops and bottoms to happen, you need to have this shift in sentiment. You know what I mean? Shift in sentiment. And there has to be fighting in this sentiment. Everybody can't be on the same page. Because that's... Does what happen? This is pretty vague here. Does that happen today? The 200-day? You're talking about the 200-day? If they didn't pass this budget, we would have seen the 200-day today. I thought we would see it in the morning. I thought we were going to gap down in the morning. That actually would have been good for us. Now, the fact that we haven't done that gap down yet is not good. Oh, yeah, you got it. Yeah, that's what I figured you meant. I can see a scenario where they ramp down and get it today. But because this budget deal has gotten passed, I think maybe they let up. Think about this from a market participant perspective. You're a guy who wants to short this market and you want to get short, right? So you're looking for your short setup. Granted, the market's gone, you know, we've gone almost 300 points. So 270 points on the S&P 500. 270 on the S&P. Boo! Straight to the downside. Okay? And you're going to come in after the budget deal gets passed and you're going to want to short this thing today? I don't think so, my friend. That would take some major chutzpah. And what's the VIX starting to do today? The VIX is easing a little bit today. VIX is easing. Where's our curve? What does our curve look like today? Still a ton of backwardation. Ton of backwardation. So the UVXY folks out there, do not try and get this thing over the weekend. That contango now is working for UVXY in the positive direction. Times 2. I did the math on it the other day for David in the chat. Basically 20%. So that's 40% on UVXY over a course of a month. You got 20 trading days pretty much. So that's a 2% boost in UVXY without anything, like just ceteris paribus. So even if the VIX stays stagnant, goes sideways, you're going to get a 2% boost in UVXY over the weekend. There you go. Or is it actually technically I think it's 3 days. Anyway. We're just go Friday to Saturday, 1, 2. Yeah, I think technically you get 3 days almost, but anyway you slice it, don't try to mess around with that trade over this weekend, okay? Even if you're looking for a volatility flush. For anybody that does want to be short volatility, we talked about it before, use puts on the actual VIX if you want to mess around with it, okay? That's the safer way to do this. You define your risk. I'm all about defining that risk, people. That's why we use options. We do incredibly risky things, but we define our risk. When you look at the grand scheme of things here, this spike up in volatility that we're having now doesn't look a whole lot different than the spike in volatility that we had in July, August. Well, this is August, I think, right? August 24th or something. Let's see. August 21st. August 24th. Yep, August 24th. That was the North Korea thing, wasn't it? No, North Korea. Was it? Oh, man. You know what? I'm not sure. No, because that was 2015, so that's before the election even. That's I can't remember what that was about. Maybe a Greek thing, who knows? It's all a blur, man. It's all a blur. Like everything before November of 2016. It was a China thing, yeah. Oh yeah, that's right. All right. And look at this historical perspective on this. I remember my buddy back here. By the way, the VIX really can't go above 100. My buddy was looking at the VIX in 2008 and was like, it can't go above 100, so what? I don't get it. And he ended up buying some puts and making some money on it back then. That was before this whole fade volatility was a thing, or at least as ubiquitous as it's become. So anyway, so the recent spike. If you notice, can I go further back? Oh darn. Let me see. I'm gonna try and pull up. Oops. We're going to pull up Internet Explorer here. Come on. I thought 100. I thought it's indexed at 100 though. So there was like theoretical. There we go. Okay, wonderful. Yeah, here we go. So I don't know that you could actually buy it then or trade it. When did they start trading the VIX at the SIBO versus posting it? Well, I guess I'll have to go into some. I don't want to get into. Obviously, I don't know. So, yeah, I've got it here to Josh. Anyway, at the time, his argument was it can't go above 100 unless supposedly this must be like a one day during the crash and there was something screwy with. So in normal market conditions or even abnormal market conditions, as long as it's not a intraday crash where the market is closed, you'll be okay. I don't know. Anyway, regardless, what was I? Oh, look, there's an elephant. Try and get the elephant off of the screen. Uh-oh. It's getting wonky. I can feel it crashing. Elephant, get the elephant off. I don't mind elephants, but you guys know what these guys sometimes putting all sorts of crazy stuff up on here that we don't need to see. Okay. Almost there. Almost there, almost there, almost there. Okay, there we go. Hey, Miguel, so I've just got my Pandora going. It's just my classic rock Pandora. And there we go. So one thing I wanted to point out was that spikes in the VIX, huge spikes in the VIX, aren't really precursors to reversals in the market. They're just not. So, what does that tell you? This is September 11th, I think. But when you actually have the reversals in the market, it doesn't necessarily coincide. Okay, let's go back to this. Or, how about we talk, and look at, so the VIX is a little bit negative today. How about we talk about what we're actually meant to talk about this morning? That was NVIDIA. And is this true? It is true. So they're up about 6.7% today at 230. Basically a spike up and then looks like trickling down a little bit. Maybe hold it up. Now again, when you're on an intraday chart here and you look at this, these lines now mean nothing. So don't go, oh my goodness, look, it's about. No. Okay. If I put a VWAP up here, it would make more sense. But we don't have that. Bit it up. Trickling down a little bit. But it looks like selling premium. Selling at premium works again. When the VIX is elevated, look to sell premium. Basically. Makes it a little bit easier. What do you mean Fallout 4? Oh man, don't start getting me all hyped up about stuff. Sometimes I get so entrenched in the stock market stuff I don't have time to look at fun stuff like Fallout 4. Is there a Fallout 4? Don't tell Pando. Pando's going to be so excited. So, a little bit of interaction with the 50-day. Chopping around. It's all about selling that vol. And still backwardation. Okay. So the risks are higher in the short term than they are in the long term. Elevated spot VIX. Do not mess around with short vol over this weekend in UVXY at least. What's on tap for next week? Well, I guess, you know, the rest of the trading day today, obviously, we've got our targets. I think we just chops around. I don't know that we're going to get a real push here in either direction. The sellers aren't really going to be compelled, I don't think, after this budget deal. The buyers don't sound that convinced that this rally's really happening either. Right? If you're looking on the dailies, this is not a good candle. Today's action is not bullish by any stretch of the imagination. This is a lukewarm reception at best. We'll have to see. 25.39. 25.39. Your Qs are basically this NASDAQ 100. Again, another ugly candle. And the 200-day on that is 60.78. What does that relate to on the Qs? 148.24. All the way down there, buddy. If it gets worse, that's where we hang out. It's no bueno. Who else were we looking at this week? Tesla. Oh, they came down, didn't they? Look at that. Huh. What an intraday move the other day. Can we shop? Hey, we haven't done them before. When did they report, Miguel? We can see that here. Let's look at Shopify. That would be pretty awful, technically. Before the market opens on the 15th, that's next Thursday, BMO. Yeah, we can do Shopify, I think. We haven't done it before. Switch it up. What other suggestions for next week? Who else is next week? Let's look at earnings whispers. That's where I get mine. There's Shopify. Applied Materials. Under Armour. We haven't done Under Armour in a while. This is Tuesday before. Ugh, no, that's not gonna happen. See who else is on the calendar. Who's after the bell on Tuesday? We could do some day of. Whatever happened to Twilio, man? What happened to Twilio? Where have you gone, Twilio? I gotta write down Shopify here so I don't forget. I thought Twilio was going to be so good, and I got sold on that. And look it down the tubes on that ugly one. When does Baidu report? Baidu reports after the bell on the 13th. So we could do a day of on Baidu. Then we could do Shopify on Wednesday. So we do Baidu Tuesday, Shopify Wednesday. Yeah? Pando, you getting this? Baidu Tuesday. That. Okay. And then, yeah, we'll do Baidu the day of. We'll do a day of. Let's do 11 o'clock. We'll do 11. Since it's the day of. Switch it up a little bit. There we go. Cool. We'll do those two. We'll try and figure out something else. Go from there. Yeah, when is AMAT reporting? On the 14th also, aren't they? Yeah, after the bell. And yeah, no. No, we're going to skip on that one this time around, I think. Do some new ones. We'll get some new blood in here. Shopify and Baidu. And then a GBU. I really need a better way to do these GBUs. I haven't quite figured it out. I don't know yet. Hey, I got some new audio equipment, and it looks like Trending Stocks is close to coming back. Very close to coming back. Right around the corner. When does OSTK report? OSTK. When does OSTK report? You know, I'm all for this, Jeff. I want to get some. I want to talk. Oh, they're the 13th. Come on. Is this confirmed? Well, I need an actual date for them. Whenever there's no asterisks there. Now here it says the 20th. We're going to have to confirm with them. We're going to have to find out exactly when this is. Because I would love to do Overstock. Overstock. Or I want to talk Riot next time. Riot has one too. Blockchain traders right around, or innovators is right around the corner. We're going to have a blockchain service that invests obviously in blockchain related companies. But if there's a Bitcoin ETF, I'm investing in the Bitcoin or ETF or ETN or whatever that tracks Bitcoin, things like that. We're going to talk a lot about crypto in there. It's going to be a lot of technical stuff going on, and then also talking about the technology. So it's going to be a new kind of thing. It's going to be fun. So we'll figure it out. Yeah, if somebody can, yeah, let's talk to Overstock, see what the heck is going on over there, because I would like to do that. And there we go. So that's kind of the setup. We'll do another maybe Friday morning thing. I like the Friday morning. Maybe Monday mornings would be good. What do you guys think? If we did a Monday morning thing like this, where we just kind of prep for the week, and you know, go over what are the big reports for the week, and you have kind of a game plan of heading into it. So what are the reports? What are the big economic events? You know, is there a non-farm payrolls report, something like that? So we can look at that. And it's like a little sort of game plan for the week. It'll be a quick sort of live check-in kind of video. This is like 45 minutes today, but, you know, obviously we don't have to stick around here for 45 minutes or an hour or whatever. We can just, we can do it. Okay, we're going to start doing stuff like that. Maybe even this... We'll see. All right. And yeah, look at this market. Swishing back down. Maybe we will get our wish, or I'll get my wish and hit that 200 day. Okay, now Tejesh, you are, when this drops negative, then you can officially say that the market is, the rally is done. You notice how this is different? It's 9:45. So the day has gone a little bit, right? The market's done its thing. Not 5 minutes in. The market's chopped around. And now it looks like it's getting... So now we shall see. Come on, 200 day. I'm telling you, folks, I know as sick, as twisted as it sounds, I really want to see the 200 day today. Let's see that happen. That'll help clear things out. It'll make for a much better start to next week, I think. Let's hope that happens. Maybe we just get down to unch and bounce. Maybe just retest the flush of yesterday. We'll see. I can see that happening. Either way, be nimble. Keep your eyes open. And get ready. All right? Lots of opportunity for the short-term trader. Lots of opportunity for those who sell out of the money spreads, put spreads, even call spreads, because the volatility's up here. So that's well, if you bought the put 5 minutes in, you'd have been in the green here. You'd have been in the red here. You'd have been in the red here. Plus all the time value. Here comes the flush. All right, folks. Enjoy. Let's hope we hit the 200 day today. As twisted as that sounds. Keep your eyes out for 25.39 on the S&P 500. All right, folks. And I'll be in the chat. And we'll go from there. All right? So I'm going to get out of your hair. This way you don't have me in your ear all day talking nonsense. And that's it. So everybody enjoy your weekend. I wish you lots and lots of profits today and next week and forever. I will be back with you on Monday, maybe. I'm saying maybe. But I still want to have a little bit of structure together before we start doing that Monday stuff. Plus, that means I have to do work on the weekend to get ready for it. And I don't know that I want to do that. But maybe I can do it so that I prep on Friday for Monday. I'll figure it out, my workflow, and we'll go from there. All right? So that's all I got for you here today on the morning after session for Zach's Live Trader. Have a fantastic rest of the trading day and a wonderful weekend. And I will see you folks next week. Have a good one.